Google just dropped a groundbreaking update, and it could mean massive profits for investors. From quantum breakthroughs to cloud dominance, Alphabet stock might be on the verge of something big. Let's break it down. Google's latest update isn't just another piece of news. It's a potential game changer for their business and their stock price. We're talking about breakthroughs in quantum computing that could solve problems faster than today's most powerful supercomputers, giving Alphabet a huge edge in future tech. But it's not just about quantum. Alphabet is already dominating with Google Cloud, their ad business is printing money, and their financials show incredible growth. So in this video, we're diving into how all of these pieces come together and why this update could drive their stock to new heights. Stick around if you want to see why Alphabet might be one of the smartest investments for your portfolio right now. Before we jump into the numbers, let's get clear on what Alphabet is all about. They have three main parts to their business. Google Services, and this is a big one. Think search, YouTube, and Android. This is where most of their money comes from, advertising. Next is Google Cloud. This is their fastest growing area. Companies are moving online and Alphabet provides the tools they need to store and process data. Then they have their other bets. This is where Alphabet experiments with futuristic ideas like self-driving cars through Waymo or health tech. Alright, let's dig into Alphabet's financials. This is where we really start to see what makes the company tick and whether it's in a good place. Alphabet pulled in $339.7 billion in revenue over the last year. That's not just a big number, it's a 10.5% increase from the year before, which shows consistent growth even as the global economy faces some uncertainty. But what do they actually keep from that? Alphabet posted $94.3 billion in net income. That gives them a net margin of 27.8%. So, for every dollar they earn, about 28 cents turns into pure profit. Compare that to the average company, which usually has a single-digit margin, and you see how efficient Alphabet is. Another important number is the gross margin, which sits at 57.9%. This measures how much they keep after covering the basic costs of running their business. Things like servers, data centers, and other infrastructure. What's impressive here is that Alphabet has kept this margin strong, even as they grow their cloud business, which is historically less profitable than advertising. Finally, let's look at earnings per share. Over the last year, EPS has climbed to $7.54. This metric is crucial because it shows how much profit is being made for every individual share of stock you own. A rising EPS usually points to a company that's managing its expenses well while growing revenue. So why does this matter? Understanding these numbers tells us how Alphabet balances growth with profitability. A company can grow revenue all day long, but if they're not keeping a good chunk of it as profit, that growth doesn't do much for shareholders. Alphabet, however, is doing both, growing and staying highly profitable. Now, let's talk about something a bit more futuristic, quantum computing. Earlier this week, Alphabet announced a breakthrough with their new chip, Willow. This chip can solve problems in 5 minutes that would take today's fastest computers longer than the history of the universe, 10 septillion years. Sounds wild, right? But what does that mean for you? Well, quantum computing isn't just a cool experiment. It has the potential to revolutionize industries. We're talking about discovering new medicines faster, improving cybersecurity, and even tackling renewable energy challenges. And Google is leading the charge. They've managed to fix one of quantum computing's biggest issues, errors. The fact that they're solving these problems right now gives them a big head start over rivals like IBM and Microsoft. Here's why that matters. When you invest in Alphabet, you're not just buying into today's tech, you're buying into the tech of the future. Now, let's check out Alphabet's balance sheet. Think of it like their financial report card. They've got $93.2 billion in cash and short-term investments. That's a huge safety net. They can use this money to develop new technologies, buy other companies, or reward shareholders. And get this, their long-term debt is just $24 billion. You may think that's a lot, but for a company this size, that's peanuts. It shows they're not over-leveraged, meaning they're not borrowing too much to grow. Why is this important? A strong balance sheet means Alphabet can take risks, like their quantum computing research, without putting the company in jeopardy. Now that we've seen how Alphabet is doing financially, let's talk about what's driving that growth and where it's heading. First up, Google Cloud. This segment is growing faster than anything else Alphabet does. Why? Because businesses across the world are moving their data and operations online, and they need secure, scalable solutions to do it. Google Cloud is stepping up to compete with big players like Amazon AWS and Microsoft Azure in this $500 billion market. Now here's the key. While cloud services typically have thinner margins than advertising, the market is massive and still growing. Alphabet's investment in Google Cloud is a long-term play to diversify its revenue. And it's working. This segment's double-digit growth shows it's carving out a bigger slice of the pie each year. But let's not forget where Alphabet makes most of its money: advertising. Ads on platforms like Search and YouTube still make up over 80% of their revenue. That may sound crazy, but think about it. Companies are paying Google to feature their products as ads on YouTube, and we, the consumers, pay not to see them. They've literally found the infinite money glitch. You might say, depending on one revenue stream for 80% of your revenue sounds quite risky. But here's the thing, Alphabet dominates the digital ad space. Google Search is a first stop for billions of people looking for products, services, or answers. And YouTube, it's the second largest search engine in the world, where advertisers can reach a massive, engaged audience. Even during economic downturns, businesses rely on Alphabet's platforms because of their unmatched ability to target specific audiences. This makes their ad revenue not just massive, but also relatively stable. Finally, there's the Other Bets segment. This is where Alphabet invests in futuristic products like Waymo, their self-driving car units, and health tech solutions. These projects aren't making much money right now, but that's okay. They're like Alphabet's innovation lab, testing ideas that could become billion-dollar businesses in the future. Even if one of these bets pay off, that could add a whole new revenue stream for Alphabet. So what does this all mean? Alphabet's growth drivers show that they're not just focused on making money today, they're actively building for tomorrow. By balancing reliable revenue from ads with high potential opportunities in cloud computing and experimental tech, Alphabet is positioning itself to thrive no matter how the market evolves. Alright, let's be real. Every investment has risks. Here are a few things to watch with Alphabet. One is regulatory scrutiny. Governments are questioning whether Alphabet has too much power, especially in advertising. Fines or restrictions could hurt their business. Number 2 is ad dependency. While ads are super profitable, relying on them for 80% of revenue makes Alphabet vulnerable if the economy slows down. And last but not least is quantum competition. Other companies like IBM and Microsoft are racing to dominate quantum computing. Alphabet might lead now, but staying ahead won't be easy. So why mention the risks? Because as an investor, you need to weigh these challenges against Alphabet's potential. So let's bring it all together. Alphabet is making tons of money today through ads, but they're also investing in the future with things like Google Cloud and quantum computing. They have a rock-solid balance sheet, which gives them room to innovate. If you're looking for a stable, long-term investment in tech, Alphabet looks like a buy. But if you're worried about regulations or how reliant they are on ads, keep an eye on those areas. The bottom line, Alphabet isn't just part of the future, it's helping create it. But that's not all, because Disney might be on the brink of some big changes. So click on the video you see on the screen right now to make sure you don't miss out. And of course, happy investing!